Hi, I'm Becky Swansburg, CEO of Stonewood Financial. Now, I spent my early career in Washington, D.C. I worked in the White House and then on Capitol Hill for the Speaker of the House and several members of Congress. And if there's one thing my time in Washington taught me, it's that the success of our retirement approach is impacted in ways sometimes we can't even imagine by the laws and legislation being debated in the halls of Congress. And that's because the vast majority of US savings dollars are saved in tax-deferred vehicles. Now, tax-deferred vehicles are vehicles like 401ks, IRAs, 403bs, all of these vehicles where we don't pay taxes while we save, and instead we defer or we push paying those taxes into the future, into retirement. When you've saved in a tax-deferred vehicle like a 401k or IRA, you have a risk in retirement of rising taxes. And that's because any tax change between today and the day you take that last dollar out of your 401k or IRA, any change could mean less money for you to spend in retirement because you're sending more money to the IRS in Washington, D.C. in the form of taxes. Now, when most of us think about the ways that our taxes might change in retirement, we tend to think about personal or individual ways our taxes might change. This might be, am I filing single or joint? This also might be, how much income do I need and what tax bracket will that put me in? But we need to remember that there's another way our taxes can change in retirement, and that's through legislation. The legislative risk in a 401k or IRA is that Congress changes the rules, and those rules negatively impact the amount of income you have to spend in retirement versus the amount of income you're sending to Washington in the form of taxes. Now, I truly believe that right now, for retirement savings, we are existing in an era of heightened legislative risk.